Okay, looks like we've lost lo-fi beats. I'm gonna play a little metal before we start there. All right, cool. That was a little band called Down featuring Phil Anselmo, who you might know from Pantera, and Pepper Keenan, the lead vocalist and guitarist of Corrosion of Conformity, one of the best deep-fried southern rock bands ever. Oh, Lunahawk says she expected heavier. We could do heavier next time. I'm trying to think what that would be. Maybe some old school In Flames. Anyway, it's a good day to be a little bit metal today. Things are humming along. The sun is shining, at least here in Colorado. And yeah, we have quite a packed agenda for today. Not only things we're talking about, but we're gonna welcome a bunch of special guests to our stage. We have from the land of Foxy, we have Toshi will be joining us to talk about all things Foxy. The TMDC's very own Professor McCarthy will be giving a quick update on some ShapeShift Labs research. We're also going to hear from some Ichi folks about adding one Fox LP to our Rari Fuse, and we're also going to hear about Porter from Jordan. I see Jordan in the audience. Oh, and we have, yes, we have DeFi Cafe is wondering if you could ask about stables. Absolutely. Yeah, man, do you want to just jump up real quick? We can talk about that. Hi.
Yeah, for sure. You hear me okay?
Yes.
Awesome. Yeah, so kind of a little selfishly here, just going to spruik the next engineering workstream budget that's just gone up larger than before, just given with adjusted salaries and stuff. And we have more contributors than last time and 5 new open positions. So just kind of wanted to raise a topic with you on treasury diversification and ensuring that we've got like efficient war chest of stables should we go into a prolonged bear market type thing.
Yeah, so this has been job number 1, the absolute top priority of tokenomics, because we don't want to be woefully unprepared for a bear market. We've made some progress on that already. One of the things we've done is, this ongoing Foxy USDC bond, which is actually a perfect segue into the second item I had here on the agenda. We initially did that for 1 million in 1 month, and then we upped it to 2. We just, as of a few days ago, did we've set it up for another month of $3 million bond. So in essence, we're gradually selling $3 million worth of Fox over the course of a month and bringing in USDC. So every single day now, and this is happening now, and I'm super excited about this, we're bringing in another 100K. So I think post Fox, meaning separating out everybody that wants Fox. Our payroll, at least last month, was something like 500 USDC. I think this month it's more like 300. Willie can correct me on that, but we're really trying to stack those stables as much as possible, because even right now we're not. If Fox were to go to 5 cents, we're not in a great place. We want to get more stablecoin exposure. There's also other means by which we can do that. There's Success Token, which is looking promising. We'll talk about that more shortly. But to use an example, DeFi Cafe, this is the first month where we can actually just pull from those stables 100% and not have to take out any loans. That's how we've mainly raised payroll in the past 2 months, is pull out a loan from Rari. It's not the most capital efficient thing to do, but we have a lot of Fox. Not a huge deal, but it's preferable to pay in stables. So I think your concerns about this are super well warranted. It's the number one concern I have about the DAO, and I feel like I'm not doing my damn job if we're not building enough of a stable stack. It's the number one thing. So this is gradually getting implemented, or I should say gradually getting addressed every day as this USDC comes in. I can grab a link. I don't know. Let's see if it's my bookmarks. Actually showing the current state of our bond, and actually you can see that USDC accruing in effectively real time, which is really cool. Does that kind of address your thoughts there?
Yeah, absolutely. Just bearing in mind that engineering budget's I think it is the largest that's been requested. It's 1.8 million in stables for the next 6-month cycle. We're also seeking a commitment of up to 17 million Fox for Fox streams. Provisionally, we're up to 15 contributors if they stay on for more than 6 months. But from a cash flow perspective, that 17 million is, pardon me, over 3 years, not 6 months. So it's mainly the 1.8 in stables that's the immediate concern. But yeah, your answer absolutely addresses it, and I'll stop hijacking your tokenomics call.
Just to clarify, that was so that was like 1.8 over 6 months, and that represents an increased amount, because I think Josh had mentioned that there would be some additions to the budget, and that you're talking about the expanded budget with that 1.8.
Yeah, that's correct. There's 1.8, and that's including contingency, non-labor, and bounties, and 5 open positions. So we're seeking approval for more than we expect to spend, but it would be up to 1.8 in stables over the next 6 months.
Perfect. Thank you. Oh, Willie said about 430K USDC total for this month. Yeah, we already have USDC ready in workstream budgets. Yeah, and also we're earning revenue from these various programs, not even including the USDC. So that's an important addendum to everything I said, is like, we have revenue streams via like our toke rewards, Fox, or both Fox and toke via toke rewards. So I think we're increasingly in a better shape here, and then certainly with some of these other initiatives, we're going to really be firming things up. We're still shooting for like 10 million total though, because we want to be able to really weather something on the order of like a brutal 18-month bear market. But yeah, thanks for bringing that up, DeFi Cafe, because it's definitely the most important thing I think that we do.
Sweet, super glad to have you leading.
Thanks, man. John, I see you up here as well.
Yeah, just wanted to throw on, I know you went over some of it there, but yeah, just reiterating that this is definitely one of the major goals of the TMDC, and it's my personal hope that we reach that 10 million goal by close to end of Q1, if not early Q2. That may seem aggressive, but we have a lot of irons in the fire, some of which we can't announce quite yet, but hopefully all of them are going to start falling over the next month or two, and we'll be in a great place one way or another in that time frame.
Yeah, and one thing worth mentioning is once we get to that goal, once we're sufficiently capitalized with stables, we have that nice war chest, it really gives us the freedom to use maybe additional stables in different contexts. I've seen some great ideas floating around. nothing that's quite made it to like public ideation yet, but we're going to have the ability to be, maybe it kind of changes our risk reward calculus in a way. Just like, from think about personal investing standpoint, if you have, if your rainy day fund is an emergency fund is already taken care of, and you have other funds on the sideline, you can perhaps, do things that you wouldn't otherwise do because you're not as risk averse. So I'm looking forward to that day when we have all those stables.
Agreed.
So cool. And again, this theme really is a common thread that goes throughout much of what we're doing right now. I did mention the bond already. The first thing I had on the agenda today is the TMDC. So the current iteration of the TMDC, as scoped out by the initial governance proposal, ends in mid-Feb, February 16th to be specific. If we just stood here and didn't do anything, the TMDC would go away. But fortunately, there's a perception that the work that the committee is doing is good. And Rotorless on the committee has taken this and really rocked out with like creating a proposal for the next phase. This proposal is currently in ideation. It's already been in ideation for 4 days. So give this a look if you haven't yet in the forum. It's roughly in scope. It's like similar to what we're doing now, but it has some iterations that we've kind of collectively deliberated on. Crucially, it also includes compensation for everybody on the committee, except for me, because I already take a salary as a workstream leader, or at least I stand to be compensated if the term goes well. But I think that makes a lot of sense. Similar to how the bond committee is compensated, this treasury stuff does take time. So there's that addition and some other stuff as well. But that should, unless there's any last minute sort of changes or deliberations, that should go live tomorrow on Snapshot. Let's see. I mentioned success token. So this is something I alluded to in the ops sprint for anybody that tuned in on Monday. But things are looking very promising for a success token. We've lined up some investors. Your man Willie has just killed it. This has been so cool. I can't wait once this is over to buy Willie a drink, because like he's really done a great job of kind of convincing investors this is a good idea. John has played a role as well. You guys rock, and we're going to get, I think, some really reputable names in the space behind Fox as a result of this. With respect to our treasury, completing success token, that sale will bring us, up to $2 million worth of stable coins, which is real. That's great. That's essentially 4 months of our current payroll right there, roughly. We did have to increase the amount of Fox that's being collateralized for a success token. Just it gets complex, but this is in response to just kind of the mechanics that make success token work. Effectively, we have to over collateralize this a little bit, similar to like some of our RARI loans. So the Treasury Committee voted on increasing that overall collateral to up to 4.5 million Fox. So all those pieces are in place. We just have to finalize these things. I'll let you guys know once that happens. Before we before we have our first special guest up on the stage, any questions about all that?
Hey, Kent.
Hey, Josh.
Hey, I wanted to ask for the proposal that's up. I love the detail in the proposal that lists all the things that, and I just commented on this in the forum. I would like to see the there's no falsifiable goals listed here, which we're asking all the work streams to provide. And I think the main one that should be in here is that stablecoin goal with an amount and a target date. I'm not sure, like you can't do anything to guarantee Fox price or anything. I think there's a lot of things that would be hard to to pin the TMDC on, but I do think that this stablecoin goal is something that I would like to see explicitly stated in the proposal.
The only concern I'd have about having a very specific number is I feel like we might become a little bit like slave to the goal at the expense of like being nimble. I mean, I really love what you're saying, and I think we could set like a target, but I wouldn't want it to be too set in
So
stone because
you could put
crypto is so crazy.
Yeah, that makes a lot of sense. What product and engineering has done is we've put very explicit goals, like we will finish these features and this UX will be built and da da da. And then there's just the little caveat, hey, we're in crypto. So you could put a thing, this is the crypto markets. Things change fast, right? This goal can be reassessed at any point, but so something like that, but still like a falsifiable goal, something that we're asking all of the other work streams to do, I think. And if it's not that, maybe it's something else, but that would be my suggestion. And you can take it or leave it.
Yeah, that sounds reasonable. I'd want to see what the other treasury folks think, but that sounds totally reasonable, and also kind of mirrors, like you said, what work streams are doing. It's also nice to just have like an idea of like, okay, projecting out like this feels realistic. I'm always a fan of like the SMART goals: specific, measurable, actionable, realistic, time-based. Getting all buzzwordy there, acronyms, but I think that's really smart. So we have this long-term goal of like 10K, I mean 10 million stables. But if you were to sort of maybe prorate like our current stable accumulation rate, and then factor in some other things, I bet we could come up with a good goal. So, all right, let's move on to the next one. If we could have Toshi up on stage, let me see if we can get you up here. There you are. All right, so just some quick context, guys. Toshi has been working on Foxy, which is our way to, it's like a staking contract, which will redistribute rewards to stakers. Toshi is awesome. I've had the pleasure of working with him for multiple years, and I can't think of anybody better to be cranking on this. So welcome, Toshi.
Thanks, Kent. Yeah, like Kent was saying, Foxy is going to be a rebasing token. So it's going to be on the Ethereum network as a ERC20, but it's going to be basically a way for you to invest your Fox and gain Foxy through a smart contract. Initially, we're just using this to invest with TokenMac, but this is going to grow into bigger and better things. So it's a very exciting project, but right now we've just finished most of the smart contracts. So we're going to go through that and add testing, and then we're going to start the audit process, and then we're going to build a front end to integrate with the Web v2 that's out right now, and then hopefully by the end of March have this out for users to use.
Toshi, can you speak a little bit more to the audit process? Are we free to talk about who will be auditing? Is it going to be multiple parties that are going to be auditing?
So that's not locked in quite yet. I've reached out to Zokyo, and they are going to give a timeline and estimation back by tomorrow. We also have Ocean from the Fox Foundation, who has tons of Solidity experience, so he's going to be handling the internal audit. But we will have some external audit. Right now it's looking like possibly Zokyo.
Zokyo, not Zuko. Awesome. Yeah. So I'm certainly no Solidity expert, but it seems to me that there's some parts of this contract that are fairly straightforward. But then there's things like the rebasing, which probably I imagine are a little bit, I don't know if there's any standard ways of doing rebasing, and it's one of those things you really want to make sure you get right. There's a lot that could go amiss with something like that.
Absolutely. Yeah, Solidity is definitely like that. Luckily, Olympus DAO has done a rebasing token already that has been thoroughly audited. So we are kind of going off of their example with our own twist on it. But yeah, that's why we're going to have multiple people auditing this and looking at it. It's definitely not something you can just build and then release and say you're done.
Sorry, which other project what did you mention?
Olympus DAO's
Olympus.
own.
Cool. So kind of timing wise, it sounds like it's hard to kind of have a specific ETA on this one, but things are definitely moving much faster, it seems like.
Yeah, it's definitely coming together very quickly, quicker than I imagined that it would. The biggest question is about the audit process, because that's something you can't really skip over. If the auditing takes longer than expected, because that's all third party people doing these audits, then it could extend the deadline, and that's just not something that we're willing to, push on. It's if the audit takes longer, then it takes longer. We want this thing to be secure.
Yeah. Somebody once likened smart contract code to like space shuttle code. You only get one chance to get it right, and if it blows up, it can blow up in a really bad way. So I love that approach of taking our time.
I like that analogy.
Hey, John.
Hey, really excited about Foxy and been obviously following some of the developments on it. Toshi, I just had a question if there was any particular aspect that has come up as you've been working on this that has either surprised or has worked better than you thought it would or is harder than you thought it would be. Just I'd love to just hear a little bit more about that process as you've been working on it.
Yeah, absolutely. I mean, the rebasing mechanic's actually really cool. So Olympus used this concept of GONs, and so because Solidity doesn't have floating point numbers, we use GONs and initial total GONs that once more tokens get put into it and they rebase, then the GONs per fragment changes. And when I first started looking at this code, the math behind that kind of blew my mind a little bit. But after a few days of working with it, and looking at it and writing unit tests for it, it's really a clever way that they figured this out. That's probably the coolest part of all the contracts that I've realized.
Cool. Thanks for sharing that.
Yeah, absolutely.
And this has some direct tie-ins. I mean, it's a very direct tie-in to tokenomics. We're kind of talking about the technical side of stuff right now, but this is huge because it really enables Fox holders to reap the benefits of the growing Fox ecosystem and revenues generated by the platform, and is a very important thing. It also has tie-in with the TMDC. I don't know if you guys have had a chance to read Ocean's proposal. This is very well articulated on the forum, and he did a great job of spelling out kind of not just the hows, but also the whys of all this stuff with Foxy. And one of the things that will be necessary is for the TMDC to take on the extra role of deciding how to allocate rewards to the staking contract and to stakers. So initially, it's been proposed that our token rewards, at least some portion of our token rewards, are redistributed to Fox stakers as rewards for them. But then there's a question of, okay, well, To what extent do we do that? To what extent do we maybe just continue to hold as a treasury? Also, like Toke is just the start. There's going to be myriad opportunities for us to distribute rewards from the other things we're doing. We have a presence in so many different things already. And as this is scoped out, that will fall under the Treasury Committee. The Treasury Committee is amenable to this. I think it makes a lot of sense. And even in Rotorless's proposal, he's added the extra role for that already, knowing that this could be coming. So yeah, all of us in Tokenomics are super stoked to take this amazing piece of financial tech and really figure out how to employ it in a way that's going to benefit Fox holders across the globe. So thanks for your hard work.
Yeah, thank you. And yeah, that proposal is awesome. Ocean's been a pivotal part of this whole process. He's been an advisor on the bounty, and he's definitely pushed this thing in the right direction. I wish he was here to speak about it.
We could always have him in one of the subsequent weeks here. He has been over a few times to chat. It's always good to hear his thoughts on it.
Oh, nice. That's cool. Yeah, well, I'll be joining probably every week from here on out.
Awesome. Yeah, never hesitate to let me know if you have more updates and you want to get up and chat with us.
Cool. Sounds good.
All right. Thanks, Toshi.
Yeah, thanks, Kent.
Okay, cool. Our next special guest. I feel like it's a game show. Dun, 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 dun. All right, our next special guest, hailing from the TMDC, Professor McCarthy. So Professor is going to be talking about a ShapeShift Labs effort. This is our first sort of initiative under ShapeShift Labs, which is a kind of just a subdivision of tokenomics dedicated to research and experimentation. The research angle turned out to be a pressing need because we had a team approach us called Grow about taking part of our treasury and putting that in their risk tranched stablecoin. It gets really complex, but luckily Professor McCarthy has a great eye for this stuff, and he's been analyzing it and just going to provide some updates in terms of where he's at. Hey, Professor.
Hey, Ken. Thank you so much, and GM everybody. Yeah, it's been really interesting to get into their forums and Snapshot and Discord and watch their governance calls and kind of see how things are evolving. The kind of long and short of it is they're asking for 3 million of stable coin. So one of the first things that I asked was, well, is this Fox? Because their initial proposal, talked about both a number of Fox and a number of equivalent USD. And so they said, oh, well, at this time we're only equipped to handle stablecoin. And so they essentially, so they're asking us to deposit it into their low risk, low reward tranche. And the logic goes like this. Essentially, central banks and other monetary authorities, they want to have the most liquid thing possible, right? They don't really want to hold cash because just holding actual cash is a security risk and it doesn't provide any interest, and so they usually invest in U.S. and European treasuries, which have a low interest rate of 1 to 2%, but 1 to 2% on $30 billion or whatever the case may be ends up being a lot of money. And so it's a similar kind of logic here in terms of they have created these two pools where in the higher risk, higher reward pool takes the whole haircut. So if there's any kind of stablecoin failure, if there's any kind of protocol failure, the people that are in what's called the vault pool are the people that are going to get the haircut first. And essentially the password, the PWRD or PWRD users don't lose any of their money essentially until the vault users are completely liquidated. And so it's and as a result, the reward, the APY on the vault, is about twice that of the one on the P word. So in analyzing all of this, there's still a certain amount of risk. They're distributing the risk, and kind of spreading it throughout stablecoins and protocols. One of the interesting things that they're in the process of developing is they found that people are often just buying this P word and then restaking it, which is essentially obliterating any kind of stablecoin risk. And so they're in the process of developing a new pool that is just an insurance that has a still a low risk, low reward kind of instrument, but that instead of it protecting against both stablecoin risk and protocol risk, it's just going to protect against protocol risk because of the behavior that they've seen in terms of the people that have been buying the P word and depositing it right now. So I have sent them a list of questions, and I've yet to receive a list back. I've yet to receive answers, except for the answer that, just to clarify that they are asking for stablecoin. And I guess I just wanted to real quick, I would go through some of these questions in terms of my concerns, and maybe if this procs any new questions, please go ahead and DM me or put it in the tokenomics chat, and I will make sure to add it to either the report or to what I'm asking them. And so the first one that I'm asking is kind of, what are the processes for including new stablecoin, new protocols? How is the portfolio balanced? It says that assets are compartmentalized into several protocols with low correlation, but correlations of what specifically? What are the historical correlations that we've seen? And how are existing protocols reevaluated? I asked about, without trying to pry, what's the adoption process like? Have things slowed down? Was the reaction contrary or in line to your expectations? I asked about this new tranche, which insures only against protocol risk. And I asked how that might impact any large P word deposit that we make, which I don't think that it will, but since I'm evaluating this for the existing P word, that's why I asked about that. I asked, this one has kind of been keeping me up at night. At what levels in the current risk sharing, at what levels is the current risk sharing system untenable? So, what is the upper limit as to which we can deposit P word and reasonably expect vault users to absorb all downtail risk? They've had a few integrations, but I'm asking if they've got any more in the works, because that would kind of give us, a little bit more ease at this. And I asked about specifically, so there was a cream exploit, and it was kind of a good test in terms of, does it work? And so the vault users took the hit, the password users were made whole. And they ended up, obviously switching protocols away from where the exploit was. And one of the things that I asked is, the protocol methodology, as best that I could find, integrates DeFi safety scores. And I said, in light of the Cream hack and the resulting vault losses, Cream's 83% DeFi score, $1.5 million of bounties, Trail of Bits audit, which is the same company that's auditing them this year, and relatively low protocol TVL appears to not predict risk as well as the protocol evaluation criteria would like. So that's kind of my deepest dive question there in terms of, how did they, not just how did they react in terms of the protocol, but how did they react in terms of their selection process in terms of the rebalancer system. At the end of the day, it's not too exciting because it's just such a small amount of rewards compared to the other things that we have generating stablecoin, right? If we put 3 million in there, we're going to get 60 to 120,000, and it's going to cost 15,000 to take it out because there's a 0.5% holder fee that essentially, kind of adds to the fees whenever anybody withdraws from either vault. They take 0.5% of that amount. So if we were to invest for a year and assume 2 to 4% returns, it just doesn't seem terribly attractive to have that added smart contract risk, and just the added risk of, if there's going to be a real big downturn, or if there's going to be some sort of exploit or some sort of stablecoin disaster, the chances of it being having contagion, I feel like is pretty high right now. And so this does diversify throughout the things, but it doesn't insure us against contagion, which I feel like is probably one of the bigger risks. So I'm kind of leaning towards no, that we're better off keeping our stable coin, and maybe keeping an eye on their future iterations. But yeah, that's where I'm at right now. So any questions, any comments are greatly appreciated.
Hey, thanks for laying all that out and such an incisive analysis. I'm interested to see what they say in response to those questions. I agree, all things considered equal, there's quite an opportunity cost to locking up that much stables, even $1 million worth of stables for a relatively low amount of, relatively low return. Also, yeah, that withdrawal fee is strikes me as onerous. Professor, do you have any sense for how long this project has been live?
Since October 1st.
Okay, so it's not brand new. It's going for a little bit.
Yeah, it's had 2 audits. It went through a G code hackathon thing, and I kind of went on a deep dive in terms of the judges to that, and they're all like reputable degens. So it's and they're, like I said, they're doing a Trail of Bits audit this year. But I mean, like we've seen, that the Cream had a Trail of Bits audit. So none of these things are really bulletproof. It's a great idea if we were starting out and we didn't have these bonds and this token reactor and all of this other kind of stuff. Then I would say that I might consider it, because some return is better than no return. But I think there's nothing as good as actual fresh dry powder stables in wallets that we control, especially when the reward doesn't seem to match the risk.
I concur. And it looks like these markets aren't especially liquid either. I'm looking at just powered PWRD on CoinGecko, 10K over 24 hours on Uniswap V2. So
yeah, the number of holders and the amount of it's not good in terms of widespread adoption so far, which I think is why they've come to us, right? Because part of it could be really good press to say look at this DAO deposit using this P word kind of for its intention. But like I said, it just, with given the other opportunities that we have, the opportunity cost of our money, it just doesn't seem worth it. Agreed.
Yeah, I guess we can hold off on any sort of final decision until they get back to you and that's finalized. But if it does turn out that it's not a good fit right now, I found that it's always a good idea to keep an eye on projects. They are pretty new. I mean, hell, a month is a year in crypto, but when you think about it, being live since October is not super long, and they're still maybe getting off their finding their sea legs, so to speak. So it's cool that they reached out to us, and we can
One of
always
their
reevaluate in the future.
a suspicious thing too is like what they don't have very many partners. Like they're partnered up with Argent, and like within the Argent wallet you can buy only Vault, not Password. You can only buy Vault and Yield Farm Vault there. But the other partners that they have, like it hasn't been updated. Like one of them hasn't been updated for like 2 years. So like they're saying that they're partners with this and it'll be in my final report. I forget what exactly the name is, but I went to that website and I looked through their projects, and they're like, oh, coming soon. And then I looked at those projects, and those projects are dead, and the last time we saw anything was 2019. So that's also kind of a red flag for me in terms of it doesn't seem like their partners are still working on stuff or updating their websites about the stuff they are working on, if that makes sense.
Yeah, that's definitely potentially a red flag. If somebody's bragging about partnering with like Dash or something that's dead, like, not great.
Yeah.
Hey, Willie.
Hey, awesome report. I just want to make sure we are saving some time for our guest
Yes,
today.
please go.
Awesome. Thanks, Professor McCarthy. Hey, look forward to meeting you in RL soon, sir.
Yes, and thank you to everybody in the scholarship committee. I'm so excited. All right, see you guys then. Thanks.
See you soon.
Yeah, thanks, Professor. So yeah, we have our next special guest. We're going to be talking One Fox and Angel Vault LPs and Fuse. I think we have someone from Ichi joining us today.
Yeah, we got both Nick and Grace, two Ichi friends. Just invited you guys up on stage. And yeah, we got a lot of exciting stuff to talk about with our Ichi friends. The Angel Vault has been live for 12 days now, so I thought it was a good time to kind of reflect on the success of the Angel Vault so far, and talk about kind of the best things we can do to improve the functionality of the Angel Vault,
Cool.
primarily, which is increasing the amount of liquidity in there. And Ichi has a really cool strategy that they've been doing to maximize the amount of liquidity in the one uni Ichi pool. So I thought it'd be the perfect time to chat with them about how we could potentially implement that strategy for One Fox.
Welcome, Nick and Grace.
Yeah, thanks, Kent. Thanks, Willie. Nick, hey, how's it going?
Good. Thank you.
Yeah, thanks for having us.
You bet. Thanks for joining us today. So yeah, first of all, let's talk about kind of how the Angel Vault is going so far. So you guys have seen a few examples of these Angel Vaults. How would you say the Angel Vault is functioning 12 days in?
I would say they are functioning awesome. I can provide some numbers and background on that, but Nick is also involved in the interworkings of it all behind the scenes. So Nick, do you have any comments here?
Yeah, I mean, so we've seen good success on vaults that continue to grow to the market cap of the asset that they're underneath, and the ones that don't grow properly, can struggle a bit. And so, yeah, I don't know. I don't have the numbers in front of me, Grace. Do you actually have the numbers?
Yeah, something that Brian actually just posted today in our community is that our IRR is 100%. And then a separate number outside of that is the return is 88%. So the total earnings is adding up to 188%. I'm
Yeah.
happy to share this photo if I can.
Yeah, so I think what Grace is referring to is, so we've the one uni EG vault has a 100% IRR right now, and then we're giving some rewards on top of that. So contributors, vault depositors are taking advantage of about 190% a return right now annually.
And then just to provide a little bit more context in terms of how the other projects are going and what we've seen with Ichi, of course, because this is our own product, we are trying to be the star students of the Angel Vault. So we are consistently keeping 10% of our market cap in the Angel Vault, which is really shown to be strong record in terms of resistance to the market dips and keeping our price backed with the one uni. Whereas one of our clients, Fuse, they also saw a lot of success from their Angel Vault going from 50 cents to 150 pretty quickly. However, they've seen a lot more negative volatility with their price because they put a very, very small amount in their Angel Vault. So we were recommending that they put more in, but we'll see on that one.
Cool. So yeah, I can see, since we launched the Angel Vault, Fox price has not gone down, which is great to see. It has gone up, and you can see it's hard to know if the Angel Vault is responsible for it, if there's causation there, or if it's just correlation or complete coincidence. But it seems to be at least not hurting and likely helping us out here. But yeah, I just did the math, and our Angel Vault liquidity is about 3.5% of Fox's market cap. So it sounds like one of the best things we can do to improve the functionality of this Angel Vault is just to get more liquidity in there. And I really wanted to talk about this strategy that seems to be working really well for Ichi of utilizing the Rari Fuse pools to increase liquidity. Can you guys talk about how that's working?
Yeah. Go ahead, Grace.
No, yeah, absolutely. I think Nick should chime in
Yeah.
on this.
Yeah, so we
Yeah.
launched our Rari pool. It's only been a couple of weeks now. I think we have 37 million in value in there now. So we're basically allowing folks to deposit Ichi tokens in there as collateral. They can also deposit. They can also supply one uni, which is our base token, our base community token that we use, as well as USDC. And then we allow others to borrow against that, and then we give incentives and rewards for the Ichi Angel Vault. So so now we have Ichi holders who like the price of Ichi being stable and not dipping with the Angel Vault power. They're going and purchasing Ichi. They're depositing it into the Rari Fuse pools. They're borrowing assets. They're borrowing stable assets, one uni, and then they're creating Angel Vault liquidity, and then they're getting the benefits of the RR on that. Plus, we're giving more rewards on that Angel Vault LP that's staked in Rari as well. So it's allowing our users to do a little bit more leverage as well.
That's awesome. How much would you, if you guys had to estimate, how much of the additional liquidity in the one uni Ichi pool would you say has come from a result of this Rari Fuse pool versus just being deposited outside of the Rari Fuse pool?
Let me just see if I can check real quick. I don't know. Go ahead.
Well, while Nick is getting that answer, I also just wanted to touch on something that you mentioned, Willie, about making the price go up. I do want to trying to level set expectations. Of course, that's what tends to happen, right? When people launch an Angel Vault, but we'll just go with we're trying to create resistance from the price going down, right? With the wall. So that's the point. We just want to make you stable, as stable and as strong as possible with the Angel Vault.
Totally, it's a great point. And to that point, the more liquidity that's in this Angel Vault, then the more resistance we can have on the Fox price going down. So and you can look on Uniswap V3 actually, and you can see each of these ticks. So you can see it anytime in real time. You can see how much of a buy wall, how large the buy wall is at any given Fox price. And you can see right now there's about like $30,000 to $35,000 of one Fox at each price tick for Fox. So whereas if you can look at some of these other pools, like for Ichi, and you can see that there's quite a bit more one uni locked at each price tick for Ichi. So this does seem, I really like this Rari strategy because it seems like a great strategy that you guys are kind of proving is working well for increase in liquidity. And it looks like go ahead.
So a couple of things. I was looking. We haven't pulled exactly how much is staked in. I don't know exactly how much is staked in Rari, but I can say that we've had about 15 million, 10 million one uni and 5 million USDC borrowed from our Rari pool, and we know that the people who are borrowing those are either doing one of two things: they're buying Ichi with it, or they're depositing to the vault. So we have increased either Ichi purchasing or Ichi vault LP combination of those two with about $15 million. And those assets are primarily coming from our one uni treasury, right? So we're able to take some of the assets from one uni itself and deposit them in here and supply them in here for people to borrow. So we're also earning yield on the treasury, the one uni treasury on its assets that we're sitting in there. So that's how we're earning yield on them. They're returning about, I think one uni is returning about 20% when you supply, and USDC is about 12% right now. That's what we're earning on those.
Awesome. So yeah, that's another really cool thing about this too, is that it enables the DAO or the one Fox treasury to lend some of its reserves. So it can lend either one Fox and or USDC and generate yield on its reserves, which is awesome. So it sounds like there's a couple decisions for the tokenomics or the Treasury Management Diversification Committee to consider. One is, should we enable the one Fox Angel Vault LP as collateral on Rari, as well as one Fox as collateral, and enable one Fox for borrowing as well? And then how much, should we incentivize this with Fox? Should we incentivize the Angel Vault LP and one Fox as collateral types with Fox? And if so, how much? I know, so you guys have one of the top Rari pools. It's been going really well. And you had mentioned once we get up to 4% of liquidity in the Angel Vault, we could have one Fox and our Angel Vault token added to Ichi's pool. It looks like we're getting close there. We're not quite there. We're about 3.5%. What should the token TMDC think about here? Are there any trade-offs for, should we add it to the Ichi pool versus the Fox and Friends pool? Should we add it to both? And also just can you give us some background on how you came up with that 4% threshold? Should we be also waiting until the Angel Vault has 4% of Fox's market cap before we add it to our Rari pool? Curious if you guys can give us some good insights on those questions.
Yeah, so I mean, I think that we want to make sure that the growth of a vault is continuing to healthily, to grow to the levels that we think will make it successful. And so, if we add other Angel Vaults in here that aren't on that path, then we potentially have people borrowing the assets in here, going and putting in these vaults that are not able to grow successfully. So that's one thing. Two is you do want to as far as where you guys want to put yours, if you want to do it in your own or do it in ours, if you are able to come to ours, then your users that want to stake into the Angel Vault for Fox, they have access to the other assets that are in here. So right now we have the one uni treasury that's depositing into this Rari pool. We are giving Ichi rewards on one uni. So you're basically having definitely have two communities of treasuries and users that would be depositing here that other people could borrow against. So there's just more there's more depth of assets to be borrowed, essentially. But as far as kind of getting to that number, I mean, again, we're just looking for good growth and successful growth that we think it's going to go in that positive direction. So did we sit down, and I didn't sit down and write down any type of math to come up with that 4 million number. I think it's we're still experimenting with this. We're trying to we want to continue to see you guys grow successfully. So we kind of came up with that number as a goal to kind of you start to get there, we can add more things. You guys can do some things to get to that number, then we can kind of help you get over to the next hump by maybe adding you to our Rari pool, etc. So I think these are just realistic metrics that can hopefully incentivize the users for the growth of the vault itself for you guys.
Awesome. That sounds great. Well, thank you guys both for joining us and answering all these questions. It's a lot of really good information for TMDC to chew on. I am in support of us adding the Angel Vault LP token as well as one Fox to the Fox and Friends Rari pool, as well as putting some Fox rewards on it. And we'd love to see it also get added to the Ichi pool. So yeah, I think we'll definitely be discussing that and hopefully can make some moves soon.
Awesome. Thanks, Willie. I think one more thing to add to the math, another way that we've been thinking about it lately is how much liquidity do you have out there in other places, and basically just trying to build that wall to be strong enough against that. And so getting up towards that 10% number, I think from what we found has been successful. So I would say that would be somewhat of a recommendation from us. And so that'd be approximately tripling what you have in there right now. And then I also spoke with the founder, Brian, over at Ichi about some different ways that we can offer for you to come up with those funds. So just gonna list a few ideas off right here if that works for you.
Can you we are running short on time. I want to be sensitive on time. But yeah, let's do one more minute. If you can squeeze it in 1 minute, we'd love to hear it. And then otherwise we can follow up async.
Okay, sounds good. No, I'll be quick. I just wanted to make sure to pass this along because the different ways to provide that treasury or funds, direct deposits from the treasury, rewards, purchasing with tokens, protocol deposits, or Ichi has also thought of the idea of creating a liquidity deal with you all as well. So just some new creative ideas that we came up with to help you build that wall up.
Awesome. Yeah, I look forward to discussing all those, and we can definitely explore other paths as well. Thank you so much, Grace and Nick. We'll see you guys at
Yeah.
ETH Denver.
Thank you.
Thank you too. Appreciate the clear explanation. Lots of food for thought here, and probably see a lot of your team at ETH Denver.
Yeah, absolutely. We'll see you there for sure.
Right on. Cool. All right. So coming to the end here. Last but not least, we have Jordan from Porter is going to be talking about this project. Get you up here. And guys, as a reminder, if you ever feel like a little bit overwhelmed by just like everything we're talking about, we're covering a lot of ground. These are always streamed on Twitch, and you can watch those recordings whenever you want if you want to go back and listen to something. I've done that many times because there's a lot of details flying around. So always avail yourself of that. Hey, Jordan.
Hey, Kent, can you hear me?
Yes.
Okay, well, I just like to say thanks so much to you and John for bringing me in today. I love the vibes that ShapeShift has. Amazing music on the intro. Definitely a big metal fan.
Yes. Glad you liked it.
I know we got to go quick, but before I touch on Porter, I'd like to review kind of what I heard from you guys. The first thing I heard is that the big overarching thing is you guys want to get more stables on your balance sheet to build up this war chest to survive a bear market, right? The ways you guys are doing this is selling bonds through Olympus, which is selling your tokens at a discount, bringing in 100K a day. That sounds like it's working out really well. You have this success token with UMA. Congrats to Willie Fox and the team for like lining up those investors. That sounds like it's going really well. And then you've been funding payroll through Rari loans. I just checked the pool. It looks like that's like a 22 to 24% interest right now. Is that correct, or am I off there?
That sounds about right. I haven't checked it the past couple of days, but that's the ballpark. Yeah.
Okay. Thank you. And then you're issuing one Fox through Ichi. I'm a bit new to Ichi, but that sounds really cool as well. It seems like you have to supply like a good amount of stables and USDC to be able to mint the one Fox. That makes sense. But anyway, what I'm working on could potentially be another tool in the tool belt that you guys have to put stables on the balance sheet. And what we're doing is we're allowing DAOs like ShapeShift to come in and then issue a bond, and not in the like Olympus DAO sense of bond, but like actually borrowing money. So you would create these bonds and then sell them through our auction platform, and then investors on the other side are purchasing those, and you guys are essentially borrowing money at a fixed interest rate, a fixed term length, and a fixed amount of collateral. So you wouldn't have to worry about interest rates going up. You wouldn't have to worry about maintaining some certain collateral ratio, because once you put the collateral in, you don't have to manage it anymore. And then the term length is fixed, so you know exactly when you need to pay back the principal plus the interest at the end of the term length. This could be just another way to get stables on your balance sheet. You don't have to maintain a reserve requirement, so you're not worrying about getting liquidated if you were as you would be with Rari. And then you're not actually selling your tokens, right? I'm sure everyone in the Fox community is super bullish on Fox. You guys are doing some amazing things. So if you could, forego selling your tokens right now, it might make a lot of sense as a treasury management tool to kind of borrow that capital, pay some interest, and then, when Fox goes up in the future, maybe you sell some then and pay that back. But that's essentially, I know I jumped through a bunch of things. Would love to open up the floor to any questions or anything like that.
That's very cool. You guys have fixed rate and term and collateral. It really simplifies things, and fixed is kind of like, I feel like, a newer paradigm in the DeFi world. You don't see that as much. Just to walk through kind of a concrete example. So let's say we had $1 million worth of Fox. We could come to Porter and say, okay, Porter, or presumably you guys would be issuing. There would be terms at which you would issue a bond allowing us to borrow, say, a stable coin at a fixed rate?
Yes, exactly. So you would go through a configuration process where you go in. If you want to partner with an underwriter, you can do that, or you can do it permissionlessly. but you're essentially going into the platform, setting some configurations saying, look, we want to raise $2 million, $3 million of stablecoins. We're willing to put this $1 million of Fox as backing, as collateral. We want to borrow at a maximum of like a 15% interest rate. And then you would have the option to make it convertible as well. So it's kind of like, it's a convertible bond. So if you wanted that bond to convert into Fox at like 3x the current Fox price, you could do that. And then you launch an auction. And then during that auction, investors can bid. And if you get more bids and more volume, that's going to drive that interest rate down. So you'll be paying a lower borrowing cost. So there's a like market determining factor in there, or a pricing factor.
Is it possible just to borrow those funds for the term and forego the auction process? Or is the auction process sort of part and parcel of the whole arrangement here?
So right now, our first foray is the auction process. Would you prefer doing something like you decide that you're going to offer an 8% or like a 12% interest rate, and then you go and do BD and go line up that liquidity on the other side rather than doing the auction?
Possibly. I was just trying to get a sense for like what the options would be here. Maybe there would be benefits to actually having this auction process. It sounds like that's the means by which kind of like price discovery around the bond is achieved, and you have the sort of free market dynamics via the selling.
Yeah, I think the benefit would be to you guys if there was an auction process, because if there's a lot of demand for this bond, now it's driving down that interest rate. Where if you go and like make private deals with investors, they might, you're not opening it up to as much capital as you would if it was a public auction.
Very cool. And how long have you guys been in production?
So we have not launched yet. We're pre-launched, so this is something that we're going to be doing in the future. We're targeting a June, July, conservatively mainnet launch, and we started working on this November, September of last year.
Gotcha. Cool, thank you. John, I see you up on stage. You have some, I think you maybe have looked at this project a little already.
Yeah, mostly I actually just saw Jordan or someone make a post about it on Twitter, and it seemed interesting, and so I set up a chat, and me and Jordan had a really great discussion about this earlier this week. And I just really love the idea of like this under collateralized debt. Like this is something that really does not exist in DeFi right now. We know this all too well. We love our Rari pool and the ability that we can take loans out against Fox, but it definitely is not capital efficient in the amount of over collateral we have to take. So the idea of these fixed rate loans that are under collateralized and that basically, can even convert. I mean, it's something I'm not even sure if you talked about here, Jordan, but one thing you mentioned to me, which is also cool, is that there could even be an option to have them convert down the road. So almost like convertible debt works with startups, there would basically be an option for, if ShapeShift issued one of these debts, like maybe Fox goes up, and instead of paying back the loan, we could just go, oh, Fox price is appreciated. We'll just basically pay it out from the collateralized Fox, which can now pay out the entire thing. Or we could also decide, yeah, we will just pay it back at maturity. But either way, you don't have to, it's under collateralized. You don't have to worry about liquidation, and you don't have to worry about even paying it back until the expiry. So if it's a 2-year loan or whatever it is, I'm sure those times will vary depending on the market. It's something the DAO basically doesn't even have to worry about other than the amount of under collateralized capital it has to put up until expiry. So all those aspects make this really exciting to me. It's something that's up and coming, so it's a chance for us to maybe be a first mover on this and work with Porter here to work on something like this once Jordan and his team are ready. So I just was excited about it and wanted Jordan to get a little more information out to the community.
Definitely, yeah. Thanks so much for bringing me up here, John. I really do appreciate it. And if anyone has feedback or questions, like I'm in the Tokenomics chat, so feel free to ask me or DM me. I'm here as a resource, and I'm here to learn from you guys.
Is it possible, Jordan, or would it be possible to exit a bond position prior to expiry?
So it would be. I think if it was convertible, it would be difficult because the investors still have the option to convert into that underlying. If it was a non-convertible bond, you could pay it back. You would have to pay back the full principal and interest, though.
Awesome. Well, cool. We're about at the end here over time, but thank you for explaining this. I think, like kind of like John was alluding to, conceptually, this is something that could be a very powerful tool in our treasury management toolbox. I know you guys are probably, just getting all your ducks in a row for a launch maybe early this summer, but definitely keep us apprised. And yeah, things like this are great for DAO treasury management, but potentially for users too. So maybe there's also a way to get this down the road, get Porter involved with the actual ShapeShift platform.
Of course. And thanks so much for having me, guys. I really appreciate it.
Thanks, Jordan. Well, I think that about concludes our time together, everybody. Yeah, again, like if you need to go back and listen to any of this, or you have any questions, jump into Tokenomics. But yeah, thanks for listening, and see you guys soon.